Folks, my name is Dan Frio and I do this report on a daily basis. Why do I do it? Well, I want to educate you guys on real estate. I give you the economic events basically happening today and this week that might be shaping real estate for today, this week, months, and years to come. So on a daily basis, what I do is go over the economic calendar with you guys to let you know, based on the information coming out today or tomorrow this week, what's actually going to go on in housing. I can't really dissect what's going to go on with prices because that's really relative to where you live. So for example, if you're in Southern California, you're seeing a comeback or a drawback in your home prices. If you're in the Midwest and many parts of the East, it's basically housing as usual. We're seeing a 3, 4, 5% increase in values, especially in the Chicagoland area. So without further ado, let's get over to today's economic calendar to see what's in store for us this week. So the first thing I want to go to is this is what we're seeing right now, but the markets are on basically pause right now. Why? Well, the Federal Reserve's coming out and they're going to tell us what they're going to do this week. So let's analyze the data that they're seeing to see what is the Federal Reserve going to do. Are they going to continue to raise rates to fight inflation, or is that fight possibly over? So let's get over to it. Here's the economic calendar we have for the week. The first thing we have coming out tomorrow is building permits. Not really focused in on that. We kind of are, but this week we're focused in on right here. The Federal Reserve. They're going to meet this week, Tuesday and Wednesday. They're going to come out on Wednesday and tell us what they're going to do. What are they going to do? I'll let you know. They're not going to do anything. And they're going to come out and say we're going to be data dependent and we're going to monitor this and we're going to do everything. So let's really dissect the data that they're looking at. So to do that, we want to look at the inflation numbers. They focus in on what's called core inflation. What the core is basically they pull out or they strip out food and energy. So let's get over to those numbers because they were posted last week. August core inflation, excluding food and energy, rose 0.3% hotter than expected. As soon as I saw that come out, I'm like, oh, geez, we got some problems. But then I'm like, okay, wait a second. There's a lot of data here that basically is, I'll say it's not misinformation, but it's just, let's say, lagging data. What is that? Well, the lagging data is shelter. Shelter prices make up almost 40% of the inflation numbers that you're seeing right through here. So we see energy, which is hot right now, but if you actually dig into the numbers, we saw right here last week that CNBC announced, and they did an exclusive detailed interview on this, the once hot apartment market continues to slow with both annual and monthly rates, interest rates or growth rates turning negative. Okay, so what we really have to do is let's dissect the inflation numbers that we saw in the last report. Here's where they are. Okay, so if you go through here, here's the numbers that really scared me. We had energy prices. Look at most of the changes you normally see on a monthly basis. Down 4%, up 2%, down 5%, up 0.8, up 0.3, and then all of a sudden up 10%. So you have one segment of this of our inflation numbers up 10%. Then you also go down through here to the shelter numbers. We have shelter. Again, this equates out to 34% of the consumer and the CPI numbers. It's up 7.3% year over year. Well, that number's lagging because why? Well, we know that it's actually going down, and that's part of this right here. You can even see this in this interview right through here that they had. If you go down through the bottom of this, and I'll leave this link down below in the description. Housing continues to contribute an outsized share to the inflation numbers. Rent growth has slowed considerably, and median rent growths fell year over year in August. However, it takes months for the aggregate rent trends to show up in the CPI numbers. So again, we have the CPI numbers showing in here up 7.3%, but we have the numbers truly coming in possibly negative. So that could play a huge role in what the Federal Reserve decides to do. The other thing here is, remember folks, we have student loan debt that just kicked back in after 3 years. That's going to take probably about $300 to $400 out of every person that has a student loan. It's going to pull about $300 to $400 out of their paychecks every month. That's going to take a really dent. That's going to put a big dent in our economy. So those are all the things that we should be paying attention to. So what's the Federal Reserve going to do at the next meeting? Nothing. Okay, let me show you where we get this data. So right now, the federal funds rate is 5.25 to 5.5. So what we want to analyze is what's the expectations? What's Wall Street saying that they're going to do at the next meeting? Well, so to do that or find out that, we go to the Chicago Mercantile Exchange. You can see that right here. The CME FedWatch tool. What is this? It's what's the probability that the Federal Reserve will change the federal funds target rate at the next meeting? Well, that federal funds rate right now is 5.25 to 5.5. So we scroll down through here and you're going to see right here, 5.25 to 5.5. The probability of them being at that at the next meeting is 99%. I don't know if this will ever go to 100, because if you have just one person say, they're going to rate a hike, that'll throw off this numbers, but I'm almost sure it's going to be 100%. What's the probability that they're going to change it at the next meetings coming forward? Well, right here, those are off the table at this point too. Look through here. You're going to see the blue lines. That's the probability of where we're going to be at the next few meetings. You can see this meeting on 9/20, 99% probability. We're going to stay at 5.25 to 5.5. Next meeting, 70%. Then we're getting 59%. Everything is almost 50 or 60% probabilities that they're not going to change rates. Okay. Then when you get into 2024, it's looking like those lines moved over, meaning they're going to start reducing rates. And look at December of next year, 2024, the expectations are the federal funds rate is going to be at 4.5. It's at 5.25 to 5.5 now. So that's about a 1% reduction in rates where the Federal Reserve is expecting us about a year from now. So where are rates today? Well, let's get over to it. Based on the economic data we have today is basically nothing out here. The markets, usually in the morning, the markets are really volatile, but I'm expecting really no change today and tomorrow. Everybody's going to sit on the sidelines waiting for the Fed. But this is what I see on a daily basis on my screen. Why? I'm a mortgage advisor. I need to know what's going on with mortgage rates. So I don't follow the 10-year treasury like a lot of people do. Why would I not? Well, why wouldn't I just follow a mortgage-backed security bond? So this is what we follow. We follow a mortgage bond. It's called an MBS. We follow the price. This is where the price is right now and what's happening to it. All you need to know is if the price is down like you're seeing, rates are going up. Okay, if the price goes up, rates come down. There's a yin-yang, a flip-flop effect. Just think of it. Price is down, rates up. Prices up, rates down. The bigger the down or up adjustment is based on the bigger the price adjustment. Okay, so that's what you need to know. Where are rates right now? Well, this is based on Mortgage News Daily survey. They surveyed lenders all over the country and said, if you have somebody buying their first house, it's going to be their primary home, and it's a single family home, those three things, they have a 740 credit score and 20% down payment. You don't need 20% down. In most cases, you need 3% down if you're a first-time home buyer. If you're a repeat buyer, many cases you only need 5% down. But this is where your rate would be. You might be like, Dan, my rate is higher than that, or my rate's lower than that, or Dan, what can you do for me? Well, I'm glad you asked. My name is Dan Frio. I'm a mortgage advisor licensed in all 50 states. Been doing this for over 30 years. If you want to see if I can get you a better deal, well, here's my website, therateupdate.com. What you do is if you already got an estimate from somebody, upload it right here. It's a loan estimate. We're going to review it, get right back to you within probably hours to let you know, hey, you done a fantastic job. I can't beat it. Or in most cases, what's happening is I'm getting back with you saying, we got a lower rate and lower fees. Here, I'll send you my application link. Let's get started on this. So, but if you're out there and you're like, Dan, I want to see if I can qualify for a house. The main thing I want you guys to do is don't disqualify yourself. Okay, reach out to me. I would love to discuss this with you. How do you do that? Well, you can do it one of three ways. One, hit the apply now button. What it's going to do is it's going to ask you a series of questions, seeing how ready are you. That's going to give us some information on you, so when we have a conversation with you, we know what's going on. Or if you're like, Dan, I'd rather just call in or shoot you an email. Well, you can do that as well. All you need to do is scroll down to the bottom of this website, and you're going to find both those. You can reach us at 844-775-5626, or if you want to reach me directly, just shoot me an email at dan@therateupdate.com. Thank you so much for watching, guys. God bless. Have a fantastic day. And I'm going to ask you two things. One, if you haven't subscribed yet, please do. And then two, if you find value in this video, please, all I ask you to do is give it a thumbs up. It helps us get recognized by more and more people looking to possibly buy their first house. Thanks so much for watching, guys. God bless. Have a great day. Hope to see you here tomorrow. Bye-bye.